Ever wondered how one man could vaporize $65 billion? Not just any man, but a Wall Street legend, Bernie Madoff. This wasn't a complex financial heist carried out in the digital shadows. It was a magic trick performed in broad daylight. And the secret ingredient wasn't genius, it was trust. For decades, Madoff was the epitome of prestige. He was the former chairman of the Nasdaq, a titan of finance. The smartest people on Wall Street, the ones who manage billions, handed him their money, their clients' money. Without asking the most basic questions. Why? Because investing with Bernie was a status symbol. It was exclusive. You didn't just give him money, you had to be accepted into his fund. This air of exclusivity was his greatest weapon. It made people feel special, privileged, and it shut down their critical thinking. The promise was simple and alluring: steady, reliable returns. While the market was a roller coaster, Madoff's fund was a smooth upward climb. He reported consistent gains of around 10 to 12% a year, month after month, year after year, no matter what. It looked too good to be true, and that's because it was. Investigators and a few brave whistleblowers tried to raise the alarm. They ran the numbers, analyzed the supposed strategy, the split strike conversion, and concluded it was mathematically impossible to produce those kinds of consistent returns. They shouted from the rooftops that the king had no clothes, but nobody listened. The financial regulators, the big banks, the sophisticated investors, they all looked the other way. Admitting Madoff was a fraud would mean admitting they had been duped. That their own due diligence was a complete failure. So what was the grand complex strategy behind this $65 billion empire? What was the secret sauce? Here's the most shocking part of the entire story. There was no strategy. There were no trades. For years, Bernie Madoff's investment arm, the core of his legendary fund, didn't make a single trade. Not one. The whole operation was a lie, written on paper. The magic trick was nothing more than a simple, old-fashioned Ponzi scheme. He took new investors' money and used it to pay off the old ones who wanted to cash out. The elaborate monthly statements showing dozens of profitable trades. Completely fabricated. They were pure fiction, generated to maintain the illusion of success. All that money, billions of dollars, was just sitting in a single bank account at JP Chase. Flowing in from new victims and flowing out to old ones. The entire multi-billion-dollar fund, the envy of Wall Street, was being managed from a separate, secret office. While the legitimate market-making business operated on one floor, the Ponzi scheme was run on another, with a small, loyal crew who printed fake trade confirmations and account statements. It was a stunningly low-tech fraud. The big secret wasn't a complex algorithm. It was that nothing was happening at all. The prestige, the reputation, the years of trust, it was all a curtain hiding an empty stage. It was the ultimate crayon drawing. A child's simple sketch of what a successful investment firm should look like, and the most powerful people in finance bought it completely. When the 2008 financial crisis hit, the magic trick finally fell apart. Too many people wanted their money back at once, and the inflow of new cash dried up. The music stopped. Madoff confessed to his sons, and the world's largest Ponzi scheme collapsed overnight, wiping out life savings, bankrupting charities, and destroying families. But Madoff autopsy revealed a horrifying truth. It wasn't financial genius that built his empire, but our own desire to believe in an easy win. It's a chilling reminder that the most dangerous illusions are the ones we desperately want to be real. It shows that even the smartest people can be blinded by the allure of prestige and the promise of a sure thing. Thanks for watching, and if you found this story as fascinating as I did, make sure to subscribe for more deep dives into the biggest stories in finance.